Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 19th day of July 2017, and this is the Daily Report for Gold and Silver. Quiet, muted action in the precious metals markets with, in essence, unchanged pricing across the board to a little lower. Gold, for example, this basis most active August contract is currently trading off about $1 at $1,240.90. You can add another $3 to $4 in premium for the October contract, which is where our current trade resides. Silver, trading fractionally lower, off under 2 cents on the day, well above $16 at $16.25. And of course, it's all about the dollar. Dollar about 0.25% higher today, trading at 94.64. So traders, after the last 3 days of sharply higher pricing, it doesn't really surprise me that we're currently exhibiting a little bit of a pullback. The dollar is a little bit stronger today. We'll certainly want to look at a dollar chart. And at the same time, we have seen this market move up pretty dynamically from the lows that came in terms of the open on Friday of last week to the activity that we saw Monday, Tuesday, and of course today's candle right here being on Wednesday. Now, we did see the market trade to a higher low than the previous session, but a pretty extreme low nonetheless. As you can see, this market did trade under some pressure, moving to a low of 1237. What I find most resilient about gold and silver pricing today is the way this market came up off of those lows, creating a very small bodied candle. In other words, the relationship between the open and close. Market is currently trading off by about 70 cents on the day. So on a technical basis, to look for current levels of support and resistance, I have switched over to the August contract, the most current futures contract, and we do have our basic fib retracement, which comes in from about 1195 on the low side up until approximately 1300 to create our fib retracement. And what price point I believe is worth noting right now is the 61% retracement, 61.8, which falls at 1234, which also corresponds to today's intraday low. So in terms of our current trade, we did go long both gold and silver. I am looking to move the stops up effectively within the next 24 hours. And my sentiment right now is that our stop is going to need to be just under this price point at around 1234, which is the intraday low both today as well as yesterday. That low came in at around 32. So we're going to want to place it just below this particular price point. And traders, as far as our current silver trade goes, we got in just under $16, $15.95, I believe. Market is currently trading at around $16.26. Effectively, what we're looking at is a doji in today's market, so we're certainly getting a consolidating candle. Now, here's the thing. You can see these types of consolidating candles, these dojis, right before a pivotal key reversal in the market. Here, the market had been trading slightly higher before moving down, but you can also see these dojis occur as simply a point of rest or consolidation on the way up or on the way down, as you can see right here and here. So just because we have a doji, it really depends on the following candle that will determine whether or not that doji signaled some sort of a key reversal or simply a rest or a consolidation. In terms of where we're going to look to move our stops up in silver, again, we're going to want to place it below the recent lows achieved over the last couple of trading days. In other markets that we follow, it is all about U.S. equities today, with equities moving marginally higher, but high enough to have us see a new all-time record high, specifically in the NASDAQ, that up about 0.6% at 6382. Dow Jones Industrial Average up about 1/3% at 21,640. And the Standard & Poor's up about 0.5% on the day to close at 2473. So traders, the primary focus of today's opening letter was about the US dollar and really how low can the dollar go. On a technical basis, to really illustrate that point, I've pulled up a longer term dollar chart. It's simply a line chart because I'm looking to see historical highs and lows. As you can see on this chart, it goes back to 2014, 2013. Market was trading fairly sideways in a range between about 80 on the low side, a little bit below 80, and about 85 on the high side here. That's just before July of 2014 when this market really took off and moved from that area around 80 on the dollar index just to about 100. So a 20% change in terms of pricing. From there, it once again became range bound for a little over a year through 2015 into 2016, again up until about July of last year. And then the market really moved from 93 up to about just shy of 104, so about a 9% move to the upside. And that took us up until the beginning of this year, 2017. And really, since the end of last year, beginning of this year, we've seen the dollar slide from, call it 103 down to about 94, 94.65 as our current pricing. So we've seen it move down anywhere between 7 and 9%, depending on where we fix the high in current pricing. We've definitely seen the dollar slide. However, we've got a major level of support on a technical basis that could come in at around 94, and that's where I've been looking for the dollar index to go for quite some time now. If it would by chance break through there, there's really no technical support until just above 92 on the dollar index. And traders, lastly, do want to take a look at U.S. equities. U.S. equities are trading to the upside. Dow Jones Industrial trading higher, Standard & Poor's trading higher, and what we are looking at is the NASDAQ Composite. This is a longer-term weekly chart. We can see we're at the top of the range. NASDAQ is up roughly 0.6%, up 38 points at 63.82, and it is head and shoulders above any previous all-time record close. We are at a new all-time record high in the NASDAQ. The primary topic on today's show, traders, has been adjusting our stop and what makes sense in terms of a price point. We're using basic Fibonacci tools, Fibonacci retracement, as well as looking at historical highs and lows in the marketplace to identify key levels that should provide either resistance or support. My recommendation is obviously to maintain our current long position in both gold as well as silver, and we will be moving our stops up either later on this afternoon or tomorrow morning to the price points we discussed on today's report. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.